Hey traders, welcome back to the FXE YouTube channel. What an interesting week of price action. In the end, EU continued to the downside, and then we saw those wild whipsaws during NFP. Fortunately, I was sleeping through that. Anyways, for today's video, I'll do a top down and then give some ideas or some levels that EU may reach for next week and a little explanation why. But first, hit the thumbs up button and subscribe if you haven't already. Now let's get into it. Okay, let's start with the fundamentals. So next week we have a lot of news in store for us in the coming week. There's potential here for massive continuation or potential reversal. Monday we don't have any news, but on Tuesday we have CPI, and then on Wednesday we have PPI during the AM session, and then the PM session we have the US interest rate announcement, and then we have the press conference shortly after that. And then on Thursday we have the ECB interest rate announcements. We also have retail sales, unemployment claims, and then the ECB press conference. And then on Friday we have PMI throughout the Eurozone during the London session. And then on Friday we have PMI during the AM session. So aside from the retail sales and unemployment claims, all the news is directly related to the interest rates. Both the US and Euro plan to keep the interest rates flat, but any variance could see a massive impact on price action. So keep an eye out for that next week. Although I'm not sure it'll change the direction of the price, it could at least have a short-term impact. Now moving on to the yields. So what you can see with the yields is we had that continuation to the downside, and now we're seeing strong reaction. So after they've all come into discount and filled the lower fair value gap, they're starting to push up now. Could just be a pullback to fill the inefficiencies above and then continue right back down, or it could be a potential start of a reversal where interest rates continue up from here. So we'll just have to keep an eye on that, on mainly what happens in this bearish fair value gap above. If it goes through and then continues to break these highs, then it's very likely a reversal, and we may see continuation to the upside and target the previous highs. Okay, then having a quick look at the majors again. So once again, we can see EU coming down very aggressively compared to the others. While the rest are less willing to push down, they are coming down, but not nearly as strongly as EU is. I've marked some levels corresponding with time. So we have this level right here on this low on the second wave up, and then this low right here where we had that first initial impulse to the upside. And what you can see is EU has come down almost to the origin, back to where that impulse has started. EG is far from the second wave, NU and AU as well, very far from that second wave. So gives you an idea how weak the euro is compared to the other majors and how much it's come down compared to the others. But as I said before, I mean, there is a reason why. And if we go to EG, you can see that it's just been dumping for the last few weeks. And as of right now, you can see that it swept these lows right here, and since then it's more or less doing some consolidation right now. So the big question now is this accumulation or distribution? Is price consolidating to push the price up or drive the price down lower? This could have a significant impact on the price action that we see on EU next week. And as we have all that news, it's going to be interesting to see how the fundamentals interact with the price action of what we're seeing on the weakness of euro right now. And if we start to see a shift in strength of euro compared to GBP, which potentially could give overall strength to the euro and start to push EU right back up. But for now, I'm quite cautious in thinking that we're going to see EU come back up, because based on what I'm seeing on DXY and EU right now, it looks like it's more likely to continue to the downside rather than push up. Okay, so moving on to DXY, starting with the monthly time frame. So what you can see, this pullback that we had came quite deep. It swept liquidity, came into the monthly order block. It also retested the breaker block, and you can see that it tapped the OTE level as well. And since then, we've had a reaction, and this month's candle has mainly just been bullish up to now. So it's a little too soon to think that the pullback is done and DXY just continues to the upside from here, but it's starting to look that way. If we go to the weekly time frame, so what we can see is the week before last, the start of the week, we were bearish, and that's the reason why we have this wick on the bottom. And thereafter, the second half of the week, we had a push to the upside. And then last week, it's more or less just been continuation since then. But you can see that DXY tapped into the weekly fair value gap, and you can also see that we've had a reaction off of it. It's really too soon to tell if the reaction is going to cause DXY to reverse and push right back down, or just continue to the upside after the reaction. For now, I'm going to assume that it's just going to continue higher. But as we do have interest rates being announced midweek, it could be a turning point. For me, there's no chance that we're going to see the interest rates come down, and very unlikely that they go up. But I'm not so sure the impact if and when they come in flat. This goes for both the US dollar and euro. Okay, so moving on to the daily time frame. So this is what I was talking about, where the week before last, we started the week bearish, and then the second half of the week we had a reaction and then a push to the upside. I've had some pullbacks since, but what you can see on Thursday last week, so we had a massive push to the downside, gave the impression that it was shifting and looking like it may come further to the downside after tapping into the weekly fair value gap. But instead, we had a push back up to the upside, and then when NFP came around, we had a massive push to the upside, breaking the previous highs. So we do have some equal highs here that it did sweep, but not by much. But this gives the impression that it's just going to continue to the upside from now. If we go to the 4-hour time frame, so what we can see on the 4-hour time frame, so DXY did break out of this channel. So that was the first reason why I was thinking it may come down from here. And then after breaking these lows, it looked like it was going to continue further down. But what it did is it tapped into the daily demand, had a massive reaction off of it. And then after that, it played around in this area where I was thinking we may see a reversal and continuation to the downside from. But instead we had NFP, and NFP just drove the price to the upside, breaking the previous highs. And yes, I understand this could be just manipulation, and if it were, I would expect DXY to not play around in this area and just continue to the downside. But instead, it did push right back up, and then more or less has been consolidating in this range. Okay, now moving on to the hourly time frame. So you can see that we started the week here, and this was the low of the week. And then when we drove up to the upside the first half of the week. We tapped into the weekly fair value gap, and you can see how massive that push to the downside was in just those 2 sessions. So it nearly took out almost all of the weekly gains in just those 2 sessions. But after tapping into the daily demand, we had a massive reaction, pullback, and then continuation to the upside. So this area where we had that consolidation, this is where I was thinking we may see a potential reversal and price to come back down. But instead, when NFP was announced, massively pushed the price to the upside and broke the previous highs. So in this case, you could say this is just manipulation and price is just going to come back down from here. But if it was, I would have expected this drive down to continue lower and target the lows instead of reversing and coming right back up after retesting this demand. And this is the main reason why I think we're more likely to continue higher than come back down at this point. We may see something different play out after all the interest rates are announced next week, but I think at least for the first half of the week, we're more than likely to continue higher. Okay, so moving on to EU, starting with the monthly time frame. So for me, it's starting to look more and more like EU's topped out. So you can see that EU came into the monthly order block. It's also still in the monthly breaker block. And ever since then, you can see we had a significant reaction. And then this month's candle has just been pushing down ever since. It's tapped into the monthly inversion fair value gap. And I wouldn't be surprised if we see a reaction from this monthly inversion fair value gap and go back for some of the inefficiency left above on the daily time frame. But I don't think we're going to go back and attack the highs. I think best case scenario, it goes back for the inefficiency. Well, to be honest, I don't even think it's going to go back to the daily fair value gap anymore. But if it were to go up, that would probably be the area that it would target before continuing back to the downside. And then if we go on the weekly time frame, so you can see that we've had 2 weeks of significant pushes to the downside, and this is the most visible on EU compared to the other majors because the euro has been so weak. EU has completely filled the weekly fair value gap that was created on the push up, and it's now coming into the monthly inversion fair value gap. Nearly reached the weekly demand that we have over here. It just missed it, and that's assuming we don't include the wick and just consider the body as a weekly demand, so it just missed it. But then since then we do see a reaction ever since. So moving on to the daily time frame, so we started the week on this candle, and you can see it's just been pushing down all week. And then on Thursday we had a massive push to the upside, sweeping liquidity, coming back into the daily inversion fair value gap, and thereafter reacting off of it. And then Friday continued to push the price down. And then when NFP came around, we had a massive push to the downside, creating that wick on the bottom, and then we had a reaction off of it, and it's just more or less been consolidating for the last few hours to end the week. We have a fair value gap above, and it would make sense for EU to go back for it, but it could just be a breakaway gap that's left for a later date. That being said, we are in that monthly inversion fair value gap. This could be an area where we have a reaction from and go back for that inefficiency. But my feeling is that we're just reacting off the order block on the left, and then we'll see further continuation to the downside. Okay, moving on to the 4-hour time frame. So this last push up, you can clearly see that it swept liquidity before having a massive reaction and pushing back to the downside. And as it broke the previous lows, this will probably act as a strong high now. So I'm thinking right now, if we go back up for a pullback, it'll probably come up to this hourly supply area, or maybe sweep some of these wicks that were created on that push down before reversing and continuing further to the downside. So on this time frame, focusing on sells makes the most sense, and that's assuming this is a strong high. And if we do continue lower, it will likely go for a pullback. But like I said, as there's really no inefficiency, it'll probably target the supply or those wicks. Okay, so now onto the hourly time frame. So what you can see is on the hourly time frame, we don't really have any inefficiency near us, assuming this is a strong high. So all we really have is the supply that's it's already been tested actually with this candle, so potentially it may not need to go back up there, but we do have some resting liquidity here that it could also go back for before pushing to the downside. And even if we look on the 15-minute time frame, so on the 15-minute time frame, again, there's no inefficiency left above. We do have a 15-minute supply zone right where the hourly supply zone is. So even though we did a retest of the hourly supply zone, we haven't come back and retested the 15-minute supply zone. So there is a chance that we may go up, sweep the resting liquidity that we have here, and then reverse, or at the same time, maybe just come back up, take out this liquidity, and this supply zone holds, and then comes down from there. But anyways, going back to the hourly time frame, I'm going to use this time frame to do the weekly market review. So we started the week over here. We immediately came up creating the high of the week, and to be honest, I could see the same thing happening this coming week. But anyways, we'll get into that in a second. And you can see that Asia has just been gradually pushing down, and then when we had London open, we had our confirmation with that push to the downside, breaking the entire range, and then we had a pullback late in London session, retesting the supply, and then a lot of consolidation until New York session. And even during New York session, we didn't really do anything. It wasn't until PM session came around that we really started to drive to the downside, breaking the previous low. And then once we broke the previous low, we had a pullback. And then when Asia came around, we had continuation to the upside, swept the previous highs. And then during London session, price drove down, breaking the previous range and actually breaking the previous low before having a massive pullback prior to New York session. And then New York session came around, showed some signs of weakness, pullback again, and this looks like it just created internal liquidity. And then we had a second break of the previous lows, and then a massive pullback, taking out those internal lows and even some of the highs on the left as well, before reversing and then coming right back down, breaking the previous lows again. And then after breaking the previous lows, having a pullback and then consolidation. And then you can see in Asia, we didn't really do anything. We actually pushed up higher towards the end of Asia session. And then once London session came around, we had that confirmation again where we broke the range low, actually the previous low as well. And then once again a pullback, creating internal liquidity, and then a further push to the downside, once again breaking the previous lows. And then New York session drove the price back up, breaking everything in the entire range. And then PM session drove the price right back down. So this price action right here was really messy and really confusing, but ultimately it stuck with a higher time frame intention and order flow and continued to push price to the downside. We had a pullback after breaking the lows, but then we pushed down even further, and this was actually during Asia session. So during Asia session we pushed lower, and then well, it's interesting that we pushed down lower in Asian session because you often see London giving confirmation for the opposite and in this case that was exactly what happened. So even though the lows were swept right at the start of Frankfurt Open, it actually broke the range highs, giving confirmation that it may go higher now, came back for a pullback to the extreme, and then New York session drove the price right back up, breaking the previous highs. And after the break of the previous highs, had another significant pullback, coming back to the demand, and thereafter PM session drove the price to the upside, sweeping the previous highs on the left, and thereafter having an aggressive pullback, pushing the price right back down. And again, a lot of consolidation during Asia session. Didn't really see a lot of heavy movement. And then price continued to push down until London session, and then London session pushed the price back up, didn't break anything, so no confirmation that it was going to push higher. It was just retesting the supply, and thereafter came back down, breaking the previous lows, giving some confirmation that it's going to continue further to the downside at this point. Pull back, testing the extreme, some consolidation, and then New York session started, and then it started to push the price right back down. Didn't break anything at the beginning, and then when NFP came around, that's when we had that massive drive to the downside, breaking the previous highs and aggressively pushing to the downside. Consolidated at the lows before a really aggressive push to the upside. And at this point, this is where I was saying on Dixie, where if it really was going to reverse and just push to the moon from here, it should have done that in this candle. But instead, all it really did was mitigate the highs and then come right back down, and then ended the week with consolidation. And that's why I think at this point it's more likely to continue to the downside now, because if it was going to reverse and continue up, it should have done it on this candle. Now if we go to the lower time frames, so like I said, I suspect this is our strong high now, and you can see all the way down there's really no inefficiency that's been left behind. So the only inefficiency that was left behind was this fair value gap here that has completely been filled, and then you can see that price has just been going lower and lower ever since, where we see this supply chain that's being completely respected all the way down. And then we have this hourly supply, and like I said, price had already come back into it, but this 15-minute supply hasn't been retested. So this could be a potential area where price comes back to before continuing to the downside. And like I said, I'm bearish now, so I'm primarily looking for only sells now. So the first bearish scenario that I would be looking for is a pullback to sweep the liquidity above right here, come into this supply, reverse, and continue to the downside from there. The second scenario I'll be looking for is all of this liquidity to be swept, price to come into the unmitigated 15-minute supply above, and then from there continue to push to the downside. And then if we think about potential bullish scenarios, so the first one I can see is price the market opening with the price coming down and targeting the fair value gap filling the fair value gap and thereafter reversing and pushing to the upside from there. The second scenario I can see is complete fill of the fair value gap coming into the 15-minute demand, and from there reversing and pushing to the upside. So like I said, my bias right now is bearish. I'm looking more for sells than these buy scenarios, but I don't know, we just have to see what happens at the start of the week to see if we do continue to the downside or we do have a reaction at these levels and start to see some break of the highs and then potential continuation to the upside. But like I said, if we were going to continue to the upside, I would have expected it to happen from here, and that's why I think it's more likely to continue down than reversing and pushing up at this point. But then at the later half of the week, after the interest rates are announced, that's where we can see some unexpected movements in price and potential reversals at that point. And if we think about the targets, so the upside targets, for me, the extreme is really this daily fair value gap. So this is the main area of inefficiency that we have left behind, and we also have a 4-hour fair value gap at the very top of it as well. So to me, this is like the extreme that price would go to before reversing and continue back to the downside. At this point, I don't think we're going to break the highs, but who knows? You never know. In terms of downside targets, so downside targets, for me, we have a bunch of equal lows over here. That would be the first area that I can see price going to. I mean, at this point, we don't really have any inefficiency left on the left. We nearly filled the impulse that we created on this push up. And then below that, we don't have any inefficiency. So if it starts to come down, the most likely target for me is the sell side liquidity. And then the next target that I could see price coming down to is this daily fair value gap. So that would be the second target. But as I said, it's looking more and more that it's full on bearish mode now. I mean, it can just continue to push to the downside from here and potentially even target the lows. Not sure it's going to happen next week, but you never know. Those aggressive pushes down that we've had have been quite massive. So I wouldn't be surprised if FOMC or ECB had a massive continuation to the downside. But whether we get that low or not is a completely different question. So just to sum up, my bias will remain bearish, and I'll mainly be looking for sells the first half of the week. And then I'll wait and see what happens at FOMC and ECB interest rate announcements, and then just go with the flow from there. I've already explained the scenarios that I'll be looking for at the start of the week, but like I said, we'll be focusing mainly on sells unless I see the high from last Thursday go. And just a quick reminder, we're at the end of the year, we're going to have less volume in the markets, so there's going to be more chance for manipulation. So enter trades with wider stop losses and take profits sooner. Anyways, that's it for this weekend's analysis. Hopefully you guys found value in today's video, and if you did, a like and a subscribe would be appreciated. Enjoy the rest of the weekend, and I'll see you for the next one. Peace.
Black Swan.